Hi, Charles Sizemore here. So in this week's Investing with Charles, we're going to go a very different direction. Of course, you know me as like the retirement guy, the dividend guy, kind of that conservative, stodgy investor guy. Well, today we're going to talk about crypto. We're going to go a completely different direction. So, of course, the first question you may have is why crypto? Why now? You're usually the boring dividend guy. Why are we now talking about crypto? Well, the answer is pretty simple. This is really where the action is right now. Fortunes are being made. We want to have some exposure here. I'm not going to recommend you sell all of your good, workhorse dividend stocks here that have been paying your bills. That would be crazy. I don't think crypto should be a huge part of your portfolio or anyone's portfolio because it is wildly speculative. A lot of these cryptos may go to zero. The entire crypto space may very well go to zero. I mean, we don't know, right? This is still very, very new, and just to a large extent, still kind of mostly unproven in the real world. So we're still in an early stage. We don't really know what direction this goes, but it is exciting. There is a lot happening there, and I think crypto in some form or another is going to be with us now essentially forever. I think in some ways it's going to replace parts of the financial system, and we want to have at least a little skin in that game. So speaking of that, well, I have crypto in my mind because I just recently bought a new house where I'm supposed to close actually later this week. And good night. You look at the home buying process and it is so antiquated. There is absolutely no good reason why I have to spend thousands of perfectly good dollars on title insurance. Come on, really? Because someone somewhere may have a claim on my house or may have a claim on the land, or the previous owner might not have perfected the title, or really, like, that's still a problem in the year 2021. You look at something like the blockchain, it's an immutable ledger. You could have a property's entire history out there in the blockchain where the whole world can see it. There's absolutely no room to dispute ownership. There's no possibility of a title dispute because it's all out there, all in the open, completely transparent. That would make the need for title insurance go to zero, which would lower the cost of my house by the price of that title insurance. It's you look at this stuff, you're like, why are we not doing this already? I mean, we're getting there. We're getting there little by little. We're just not there yet. So anyway, that little aside notwithstanding, let's talk about the logistics of crypto. How much should you buy? Where should you do it? Should you do it in an IRA? What are, like, if you're starting from zero here, what do you do? To start, there's really no bad way to buy crypto. I would say this: don't try to get too exotic. I tried to buy Bitcoin like 10 years ago, and talk about a fortune lost. I did not buy it 10 years ago because I couldn't figure out how. It was more difficult back then. You had to be a bit more savvy on a computer. There was no Coinbase or equivalent back then. You actually had to store your Bitcoin on a hard drive. Back then, there was barely even a cloud. So it really was a hard drive. And, I know people that were dabbling around, bought some crypto, back in the early days, and they lost the hard drive, or the hard drive crashed on them and they just lost it. And, the value of that Bitcoin today would be millions. So don't get too creative on that. The way to buy Bitcoin now is just go to an established company, go to a Coinbase, Interactive Brokers, even PayPal. Any of these big companies, they have the infrastructure in place where, you're going to pay for it. There are transactional costs there, but it's worth it because what you're buying is safe. It's not going to disappear. A hard drive's not going to crash. The value will fluctuate, obviously, but you're not at risk of just losing it because, well, you forgot the password to the encrypted hard drive, or, well, the hard drive died, or, well, somebody hacked your computer and stole it. You don't have to worry about that if you go with one of the big boys like a Coinbase or someone like that. So, okay, that established. Is it better to buy it in an IRA? Is it better to buy it in a cash account? Really, there's no wrong answer there. The negative of buying it in a cash account is that the taxes on this are still sort of in their infancy. The IRS is taxing Bitcoin and Ethereum, all this stuff, that taxing cryptos as if they're securities, not as if they're currencies. So will that change tomorrow? I don't know. But right now, it can be, the tax hit can be pretty substantial. So an IRA might not be the worst idea. Now, you don't want to put your whole IRA in something like this because IRA money is precious and this is very volatile. This is something that could go to zero. You want to be careful. But there are some IRA brokers out there that will hold crypto. I don't have any particular one that I would recommend over the others, but you can just Google IRA crypto, IRA Bitcoin, and several will pop up. Just do your research on that. It's fine to hold crypto in an IRA. There's no problem with that. There are some additional cost. It may cost you a little bit more money in transactional fees to hold it in an IRA. That might be okay for the tax benefits. So it may just come down for you to where you have the liquidity. Do you have liquidity available in a taxable account, or do you have a large IRA that you're not, you have this excess liquidity there that you don't have a home for? That may be what ultimately informs your decision there, just where you have the cash. Now, position sizing. You can get any two investors in a room and they'll argue about this. What is the correct position size for cryptocurrency? Keep in mind, this is stuff that could go to zero. I don't think it will. I think cryptocurrency will be with us for a while, but individual cryptos will, of course, go to zero. Like some of these will make it, some will not. Bitcoin, Ethereum, Ether, these bigger ones that have been around for a bit longer are more likely to stay the course. But even some of these, they may be eclipsed by something newer and better. So anything you buy, keep in mind it could go to zero. So you have to ask yourself the question: what percentage of my portfolio would I be comfortable losing? If it went to zero, would I be devastated? For me, that number is 2%, 3%. If I were to lose 2 to 3% of everything I've spent my life working for, not the end of the world. I'd be, wouldn't be happy about it, but it's not the end of the world. I could maybe go as high as 5% and wouldn't be devastated if it went the wrong way. Would I be willing to wager 10%, 20% or more of my net worth on a cryptocurrency, or even all cryptocurrencies in aggregate? No, I would not. That's too much money for me. I'm not comfortable taking that amount of risk. Now, if you're younger, let's say you're in your early 20s, you're right out of college, you don't have much of a net worth. Your net worth may be a couple $1,000 in the bank. Well, in that case, you could put the entire thing in cryptocurrency. It's fine. We're not talking about a lot of money. But if you're established, if you've been working for years or decades, or you've inherited some money or whatever, you have a nest egg, and that nest egg is several $100,000 or millions or whatever. If you have a substantial nest egg, then the amount of money you'd be willing to put into cryptocurrency as a percentage probably shrinks. The more money you have, the more kind of innately conservative you become in preserving it. Something like cryptocurrency is not something you want to bet the farm on. So again, that rule of thumb, I say 2 to 3% is a nice rule of thumb. There's a lot of room for wiggle on that. The younger you are, the smaller your nest egg is, the larger you can go there. But the key takeaway is, just don't put more into cryptocurrency than you can afford to lose. Think of it as an options play. Think of it as kind of a small cap, micro cap stock. You're not going to put the same amount of money into some micro cap marijuana stock or something than you would in, say, Microsoft or Amazon. You're reasonably certain that Microsoft and Amazon, while they may be overvalued today, they may be undervalued. That's open to debate. But that company is highly unlikely to go to zero. These are big established companies that you can presume are going to be around for 10, 20 years at least, over the course of your retirement. Crypto, who knows? It's still early. We really don't know. So again, position sizing, there's a lot of wiggle room on that. The bigger your portfolio, likely the smaller you want to be. The smaller your portfolio, the younger you are, by all means, bet the farm, it's fine. Your farm isn't very big at that point. If you're 20 right out of college and your net worth is, essentially what you plan to use at the bar that evening, wager it all on cryptocurrency. Who cares? It's not something that's going to set you back that much. The more you have to lose, So just keep that in mind. Now, the kind of more tactical questions of what specific cryptocurrencies do you buy. I'll tell you what I've been doing, and it may or may not be the right move. Only time will tell. But what I find is it generally makes sense to sprinkle your bets around several cryptocurrencies, because you can do a lot of research on this and it doesn't necessarily matter. So I did my research, or I thought I was doing my research. I was looking into the cryptocurrencies that I thought had the best kind of real world applications. And I stumbled across the Stellar Lumen. I thought that looked brilliant. This is one that had the backing of IBM, so it had the backing of a major corporation, and it was designed to facilitate money transfers across borders. So let's say, whatever, you're a small farmer who operates, let's just make up two countries at random, operates in Southeast Asia, Laos and Cambodia. And, you're selling your products kind of across the border. You're great. Something like this could massively reduce your transactions cost. That was the beauty of the Stellar Lumen. You kind of get around international money transfers. You get around having to use the banking system. This was really particularly valuable for smaller business owners, kind of micro entrepreneurs who may not have access to a bank account in a lot of developing countries. Something like the Stellar Lumen lets them, they put this on their phone, they can just bypass the banking system altogether and do business across borders, and great. It looked like a great system. Well, Stellar Lumen hasn't really done much. I've dabbled in it off and on for a while, and it hasn't really gone anywhere. It's been one of the poorer performing cryptocurrencies despite its real world applications. You compare that to the oh, good night. The Shiba Inu, the dog, the cryptocurrency with the Japanese hunting dog as its mascot there. That thing went up thousands and thousands and thousands and thousands of percent for no real reason. It just became a meme. It just became something that people thought was cool, and it was sort of an inside joke that went viral. And next thing you know, the Shiba Inu, that there are SHIB whales out there that own billions or hundreds of millions in this coin that really isn't particularly good at anything. It's not any different. It's not unique or special in the world of crypto. It's just an also-ran, yet somehow became a top 10 crypto with at one point the value of this cryptocurrency was greater than the national gross domestic product of Albania. It was bigger than the stock market cap of Peloton. This was huge. I mean, we're talking about a multi-billion dollar asset that had no real value. Why did it become valuable? I don't know. Just meme investing. It became a thing on the internet. People were talking about it. And, next thing you know, Elon Musk is on Twitter with, he owns a dog of that breed, not the coin, the actual dog. And he's there with this picture of his dog on Twitter, and the world goes nuts and starts bidding up the coin. You can't make this stuff up. It's just nuts. So how do you invest in that? I think the key here really is just kind of spread your bets around. It's okay to have a few just crazy rolls of the dice like that. But if you had asked me ahead of time, will this cryptocurrency go anywhere? I would say probably not. It doesn't, there's nothing special about it. This looks like just another also ran. Why is this one different than any of the others? And yet that one really took off. So there's really a degree of randomness here that you can't really model. You can't really research, or I guess you can, but there's a degree of randomness that will overwhelm your research. So I guess the takeaway is, how do you build a crypto portfolio? This is the way I'm doing it. I have a few mainstays in the portfolio: Bitcoin, Ether, the bigger ones that have kind of more, I say, staying power. I mean, again, this stuff is all new, so it's all relative, but the bigger ones that are likely, at least we think today, likely to stick around for a while. And then I'll pepper in smaller positions in cryptocurrencies that are more speculative. The ones that don't necessarily make sense, the smaller ones, the ones that have a funny name that, hey, that name is cute and funny. I bet that goes somewhere because someone will think it's funny and make a meme out of it. It's fine. There's nothing wrong with having a few of those. Just keep the position size reasonable. You don't want to bet your livelihood or your next month's mortgage or rent payment on something like this that could may go nowhere, may go to zero. Who knows, right? So, by the way, I am not an expert in crypto. I'm learning this as I go. I think it's a very exciting asset class. We want to be a part of it. But if you want someone that actually has dug a little bit deeper into this, my colleague Ian King he actually writes about cryptocurrencies a lot. You probably should check him out. He's forgotten more about cryptocurrencies than I'll probably ever know. And that's good. You do want some expert opinions there, because they can alert you to some of these newer cryptocurrencies that you may not have heard of, that you may not even know exist, and they can tell you kind of the inside story on how to get them. Because some of the newer cryptocurrencies, you actually, they're not available everywhere. You can't just go buy them at you can't, they may not even be available at Coinbase, let alone PayPal or Venmo or any of these others. So at any rate, do get different opinions here, because this is a very difficult space to navigate on your own. Now, kind of wrapping it up here, my favorite crypto, the one that I personally kind of keep the biggest chunk of my small, it's not a lot of money, guys, but like the biggest chunk of my small crypto portfolio, I keep in Ether. And the reason is, the Ethereum blockchain to me seems like if you're going to have something that evolves into a proper platform, just a proper standard, it's probably not going to be Bitcoin. Bitcoin was it was crypto 1.0, and it was a proof of concept. We now know that Bitcoin works. For crying out loud, El Salvador has it as legal tender. So we know that this functions. It has the ability to function in the real world. But Bitcoin had its limitations. The number of new Bitcoin that can be mined is limited, which really, that's great for kind of maintaining the allure, maintaining the value, preventing dilution. But it is going to be problematic in using Bitcoin as a proper payment system. Ethereum may not be there either. Ethereum may not this may not be the end. This may just be version 2.0 on the way to something else down the road. But to me, Ethereum does look like more of a proper platform. A lot of other tokens use Ethereum's infrastructure. They use its blockchain as their base. So I think if anything's going to stick around, it is likely going to be Ether. Ether has lagged the crypto market, the broader crypto market over the last year, but it has been catching up of late. Like it's been catching up to Bitcoin. It's been catching up to some of these others. So that's my single largest position. Again, this is still play money for me. I'm not doing this with large sums, but that's my view there. So anyway, don't go sell your dividend stocks. Don't go do something stupid. Don't go liquidate your 401k. Keep your traditional assets where they are. At the end of the day, the dividend stocks are what's more likely to pay your bills in retirement. Even if we have inflation that gets nuts, inflation should ultimately be passed on in the form of higher dividends. Okay, we have inflation, we have higher prices. Well, that means companies raise their prices. All of that flows through to higher dividends. Good dividend growth stocks should keep up with inflation over time. Okay, these should still be the foundation of a good retirement portfolio. But you don't want that to be everything. By all means, have some real estate, have some precious metals, and have some crypto. This is, I think back to the 1990s, a lot of the .com stocks looked ridiculous, and a lot of them were ridiculous. They didn't just look ridiculous, they were, and a lot of them failed. Most of them went out of business. But some of those stuck around, and some of those internet startups of the 90s are the Amazon.coms of today. So, some of these cryptocurrencies we may be talking about them in similar terms here in another 10, 20 years. So it makes sense to have some in your portfolio. By all means, this is one of the biggest kind of word I want to use is one of the biggest innovations in finance since the beginning of online payments, or if you want to go further back, since the origins of the credit card. This really is a hotbed of innovation in finance, and it will change the way we do business. It already is. Again, El Salvador already uses it as legal tender. So, this is changing the way the world functions behind the scenes. But you want to be a part of that. You want exposure to that. But given how new it is, and given that we don't really know what the standard is going to end up being 10 years from now, it could be that every crypto we've talked about today, or every crypto you see today will just be gone, and there will be something newer and better that has taken their place as the new standard. We'll find out when we find out, but it does make sense to at least dabble in this. So by all means, go open an account on wherever, Coinbase, Interactive Brokers, PayPal, wherever you want to do it. Open an account, put a little money in it, play with it. Don't bet the farm again, but play with this. This is something that we want to be a part of. That's going to wrap it up for this week. We'll catch you next week.